Hello, everyone. So, today I have a special request video that is taking me all day to do. But I wanted to get it out because it's a question that a lot of people have, something that a lot of people struggle with, and that's growing a small account. And it can be done. So, I have 7 methods that I use or I would like to present to you that you can add to your trading to help grow a small account. So let's get started. We're going to start first with psychology. Um, there's a reason I started here because the single thing that I think the hardest thing to master is your psychology, your emotions, and it's different emotions. And this is why um, I think that's the most difficult thing to master. You have greed, which could cause you to lose on the trade because you become too greedy. We have hope, which could cause you to hold on to a trade for too long, hoping that it will turn around. We have fear, which can make you scared to take a trade because you don't know what happens. So, the market can be a little scary, but here's the thing: trust in what you know, do your studying, do your due diligence, and take the trade. Press the button. When you do, keep your stops tight, and understand you will get stopped out. I'm going to say that again. Promise you. That's how Rob figured out the triangle day out system. I mean, you're going to get stopped out. If it's still good, get back in. We've all experienced that, right? You've had something stop you out, and then it goes right in the direction that you initially intended. Yeah, that happens. A lot of times, if it's like I said, if it's still good, get back in. If it's not, look for the next trade. There are entirely too many trades every day to be salty about a trade. And if a trade is still good and you make $80 versus 100 because you missed your first entry, get back in. Still get in. Get some of the coins, Don't just leave all the coins on the table. So, more on psychology. Set yourself some goals. Daily goals help. Yearly goals help even more. I know for myself, I gave myself 2 years to become profitable because most traders don't become profitable the first 2 years. If you do, you're an anomaly. And if you do, I would love to help you get there. Go past my mistakes. Anyway, take the trade. If your setup aligns, take the trade. You might not be right. If it's not right, cut it. It's okay. Everybody is not right. There's not one single trader that can say that they were 100% right all the time. It's just not possible. You need to be okay with being wrong. I am. You will get stopped out. If it's still good, get back in. So another thing is if you do homework on the weekends like me and plan your trades for the week, stick with those plays. Don't have those squirrel moments. We've all had those squirrel moments. Oh, this is running. Oh, that is running. This got news. And while your play isn't doing exactly what you thought it was. So stick with your plays. A lot of times your plays can be played both ways. Like you might miss the first move initially on Monday and for puts, but then you can catch the reversal for calls and then get back into puts for the original way you were looking at it. So is still ways that you can play it throughout the week. Just stick with those plays. Um, the discipline of doing that will carry you through growing your account. Snatch your profits. Take those profits. That's where entries and exits come in. When you hit that target, take your profits. And we'll talk more about scaling in and out so that you won't feel so bad about if it ran off without you. How to leave runners, um, and also minimize your losses. If the play doesn't work, cut it. Just plain and simple. Just cut it. Have a set stop loss. Okay, this didn't work. I'll try it again. If it doesn't work that time, it's just I'm not gonna go. And if it goes, it goes. Maybe you can catch the reversal, but don't sit there and hold on to hopium thinking, oh, this might reverse. That can really kill your account, especially a small account, very quickly. All right, so this is a big thing right here. This will really help you in terms of building your account, staying away from pattern day trading rules, staying away from margin accounts. Margin accounts mean that you can only have 3 day trades every 5 business days, meaning you can only buy and sell one time 3 days well, 3 times out of every 5 business days. It can add up, meaning if you want to cut a loss and you've already day traded for that day, you can't. You have to hold on to it. And then if it, it's even worse overnight, you're just stuck. I've been there. Use a cash account. If you don't have a cash account, get a cash account. If you currently have a margin account, switch to a cash account. But in order to grow a small account, you're going to need a cash account. That was loud. All right, so, we know the strat. I want to really emphasize here that we will be using the strat. Use the strat for entries, exits, and stops. You want to stick to a system, and this is the system that works. It gives you actionable signals, it gives you plays, it gives you targets. And combining that with all these methods will really help grow an account. The 3 universal truths: actionable signals. Pick 1 or 2 max that you love. I love inside bars. I love inside bars because I can play it either way. I don't have to have a bias. I look for certain things within those inside bars, but I do like that allows me to play a breakout in either direction. And secondly, I love the SSS 50% rule, of course. But I try to stick to those. Those is what I normally post about on Twitter. Those type of things. Those are the plays that I love and I stick with. But you might like rev strats. You might like 3-2 reversals, and you have to find 1 or 2 and just stick with it. That's the method that works for you. Also, broaden informations. You have to draw them. You have to draw them. It's a little bit of, arguments over how many to draw. Draw them within that range. Higher high, lower low. Know where the stock can go. I like that. I think I probably got that from Rob. But anyway, the third thing is time frame continuity, something you always have to be aware of. You don't want full time frame continuity to be green and you're playing puts. You're really going against the trend there. So it's something you want to be aware of. The highest probability trades have full time frame continuity. Consequently, a good trader learns how to trade reversals into full time frame continuity. So marking those on your charts will help so you can know, is this about to go and turn the month red, green, whatever. So next we're going to talk about compounding. Compounding is important because we want you to not look for big gains. Yes, you can take 100 to 2,000 in 2 days. You can take 100 to 10,000 in a month, but that's not everyone. And those are big goals that I think are not easily attainable. And so compounding would be a better way to safely grow your account. Yeah, you can hit on some big trades, but you're going to still keep these methods so that you have that same discipline to keep growing your account. Hit some big trades, okay, compound on top of that. So part of that is the psychology of this, understanding green days is a green day. Profit is profit. Yes, they say that all the time, but would you rather have a $3 green day or a negative $25 green day? I mean, never, negative $25 red day. You'd rather have that green day, right? So aim to have a green day. We still want to win. We want more green days than red. You need to have the discipline of taking your profit, analyzing your trades, and when you hit your target, take your profit. We'll talk about scaling a little bit later, but when you take your profit and stay disciplined, then you will get those 1,000% trades. Usually, often that happens when you don't expect it, when you least expect it. So, securing the bag is also about taking profit. There's no excuse. You actually can do an OCO order. You can, that has the brackets that tells the system to sell it for you at your target. You can do take profit orders in Webull and tell it, okay, when it gets to this level, take profit. It's no excuse to not snatch those coins. Snatch them. So this is the formula that I've come up with. Um, Risk management, we talked about that. Manage your risk. Do not hold on to hopium and losing trades. Using TA with the strat for your entries, exits, and stops. Paying attention to ATR, which I'll go into in a little bit. Having a weekly plan and sticking to it. Compounding. Controlling your gratitude and emotions, being grateful for what you can get, and having discipline. That is the formula that I have. So, looking a little bit closer at risk management, I wanted to just, talk a little bit more about that. Don't hold on to losing trades. You wouldn't hold on to something that it's like having an anchor, that's just weighing you down and weighing your portfolio down. Also, you should understand when you have a small account, when you hold on to losing trades, it can really clap your account very quickly. So have a set stop loss. If it doesn't work, be done. The market is here every day, well, 5 days a week. It's not going anywhere. It's really not. It's not going anywhere. So every day you have an opportunity. It's a different opportunity. So the trade will either work or it doesn't. If it doesn't, find the next setup that does. And have a rule. I have a 3 trade rule. If my third trade doesn't work out, I'm done for the day. I don't care if I still have buying power, I'm done. So plan your trade your plan. This graphic I wanted to show you guys so you can see, what type of gains you would need to recover from the loss. It's not worth holding on to losers. And, understanding your own plan. How long are you holding? Are you looking at this on a 15-minute time frame when you're going to scalp it for 15 minutes for, a quick $100 and then you're done for the day? I understand that. So no, you shouldn't be holding that for 3 hours. So when choosing an options contract, here are some suggestions that I have. We're talking more about ATR. ATR is the average true range. So basically means that how much can a stock move in a day. This is really important because you need to know what strike to pick and how much time to give it to get to that price. So this is where ATR comes in, because if you're playing a stock that only moves 63 cents in a day, you shouldn't be playing it 5 strikes out the money, even 2 weeks out, because that's, a little bit risky. You want to play that closer in the money. Here's a tip also. For stocks that move less than $1, if you play closer in the money and load up, you can make more money off of the small 20 and 30 cent moves than you would off of let's say a bigger moving stock. So, with those, you want to be in the money like that, and you want to load up so that you can really reap the rewards of it. If you have $5 contracts, which I don't necessarily recommend, but say you had 100 of them, all you need is a few cents moves, and boom, you have, it's a lot. Now, granted, that's $500, and we're talking about small accounts, but say for the 5 you had 10 of them, and you spent $50. Then you would take it for that 20 to 30 cent move, snatch your profits, and be done. So that's ATR. You want to be aware of being at the money, in the money, or out the money. I've been talking about that. You don't want to play too far out the money for stocks that don't move fast enough. Um, give yourself time. If you actually need it, play the next week out. You don't always have to play weeklies, and weeklies should not be held for really overnight. You really want to give yourself time. And weeklies, you want them to get in the money like that. Um, Pay attention to open interest and volume so that other people are buying your contracts so that you can sell them. Excuse me. So talking about scaling in or out. So I have a 3 minimum rule, and this works for me because I don't know why. I probably heard it from someone and I stuck with it because I liked it. You could double it, you could triple it, you could like do however you want it, but it's the concept that I want you to grasp. So I buy two at first, and then I wait for the next TTO or continuation to know that the play is still good, and then I'll buy my third one. That's scaling in. I may buy more, or it depends on the position or how, I might end up with 10 contracts, but I have that three minimum. I buy those three and then let the play work out. I do the same thing with scaling out. When it hits the target, I'll sell one or two, and then I'll put a stop on the last one, and that's my runner. Or you could sell one and then just put a stop on the second one and leave the third. It's just up to you. But the point is to take the profit. This also helps you when you only have one contract and you're like, oh, I got stopped out. If you have three, you can take that profit. You can get stopped out and you can be happy with what you got because you took your profit. And on your stop, you got stopped out in profit. So going back to us being happy with our gains, we're happy with our gains because it's a green trade, right? So that's how that works. So, before I end this, I did want to show you guys something else. I am going to post this in the Discord. So give me a second so that I can open it first. Here we go. So I am going to post this in the Discord. This has clickable links. And if you're not in the Discord, you can join or you can just copy this here. I'll try to put a couple links down in the description below. But these are the parameters that you can use on the FinViz screener. Consequently, I would just want to note you can also change this later in the week to like over $15 and over $1 to get the bigger price stock moves later on in the week, which you would probably want to do like Wednesday or later. And so here's the same thing, the parameters with Run Strat. And then these are scanners that I recommend. And I always recommend Frank's spreadsheet just because it's so informative. And it may be a lot, but I did do a video kind of breaking it down on what to look for. And I will link that also. So yes, and then these are lists of my cheapies and favorites. This is TradingView and this is Thinkorswim. So that is all I have for you guys. Hopefully this is helpful. I would love to see you guys out there growing these small accounts and, just having a discipline to really grow with this. So thanks again for watching. Like, subscribe, notification bell, all that jazz. And I'll talk to y'all later.